Standard deviation is a statistical term that measures the amount of variability or dispersion around an average. Standard deviation is also a measure of volatility. Generally speaking, dispersion is the difference between the actual value and the average value. The larger this dispersion or variability is, the higher the standard deviation. The smaller this dispersion or variability is, the lower the standard deviation. Chartists can use the standard deviation to measure expected risk and determine the significance of certain price movements. Standard deviation values are dependent on the price of the underlying security. Securities with high prices, such as Google, which price is plus or minus 550, will have higher standard deviation values than securities with low prices, such as Intel, which price is plus or minus 22. These higher values are not a reflection of higher volatility, but rather a reflection of the actual price. Standard deviation values are shown in terms that relate directly to the price of the underlying security. Historical standard deviation values will also be affected if a security experiences a large price change over a period of time. A security that moves from 10 to 50 will most likely have a higher standard deviation at 50 than at 10. On the shown chart, the left scale relates to the standard deviation. Google's standard deviation scale extends from 2.5 to 35, while the Intel range runs from 0.10 to 0.75. Average price changes in Google range from $2.50 to $35, while average price changes in Intel range from 10 cents to 75 cents. Despite the range differences, chartists can visually assess volatility changes for each security. Volatility in Intel picked up from April to June as the standard deviation moved above 0.70 numerous times. Google experienced a surge in volatility in October as the standard deviation shot above 30.